So basically what we think, it will shift the pressure from pricing to rents.
Joining me now are Nerida Conisbee from Ray White Real Estate Group, their chief economist, and Brad Armitage from the Housing Industry Association. Nerida, first up, what do you think the effect on prices will be from these tax changes?
It'll definitely slow down price growth, primarily because we will see a drawback in investor activity. But because we're seeing a drawback in investor activity, it is likely to lead to fewer rental properties. And so basically what we think, it will shift the pressure from pricing to rents, and rents will accelerate at a faster rate than prices.
So if you had to put a number on it, what kind of price decline do you think we might see as a result of these changes compared to what we would see otherwise? Treasury estimated 2%. Do you think that's in the ballpark?
Yeah, look, it's very hard to tell. I mean, if you've got markets like Perth sitting at 25%, you've got markets like Melbourne sitting at around 4%. There's definitely a floor at which, as to how much prices can fall, primarily because construction costs are so high at the moment. So replacement costs for buildings or for houses is very high, and so that will keep pricing elevated long term.
And on the rental front, the government estimated that it might impact rents by $2 a week for a typically priced rental property. Do you again think that's in the ballpark, or would you expect a bigger effect?
Look, it does depend. I mean, if we've looked at places like Victoria, we've very clearly seen that higher taxes on investors has discouraged investors. In 1 year, we saw a loss of 20,000 20,000 rental properties in that market. We did see rents moving at double the pace of what we saw prices. So at this point, it is difficult to tell, but we do think there'll be a fairly immediate impact on what happens to rentals.
And Brad, obviously rents are really driven by supply and demand, and from the housing sector, supply is a key issue the government's trying to boost. What effect do you think the budget will have on boosting supply?
Well, it's a bit of a mixed bag, Michael. On the one hand, there is an additional $2 billion for last mile infrastructure, and $500 million of that is set aside for regional Australia, so that's positive. On the negative side, we have changes to negative gearing and capital gains tax, and the budget papers themselves earmark that we're projected to build 35,000 less homes over the next decade due to those changes. Now, in a housing crisis, any measure that will reduce the amount of homes we build is not a really good thing to do for overall supply.
The government did say in those same Treasury papers that the supply measures, the $2 billion infrastructure fund announced, would boost housing supply by 65,000, so they're claiming a net gain of 30,000 homes. Do you think that's realistic based on what you've seen in the budget?
Well, it really depends on how the infrastructure money gets to where it needs to go. We need to make sure that there aren't barriers to it getting to those local councils that need it, and the infrastructure gets put in place. But I guess our question would be, why now? Why in a housing crisis would you do anything that has a negative impact on investor activity and investors entering the market right now?
So obviously the government has grandfathered the changes to negative gearing for existing investors. Likewise, the capital gains tax changes don't come in and are prospective from July 1, 2027. Do you think that does enough to safeguard investors in the market, or do you expect to see some exit?
We will definitely safeguard rental properties. I mean, if they did remove negative gearing on people that were already negative gearing, we would have seen a run on sales, and so people getting out of the market quite quickly.
And a much bigger price fall.
And bigger price fall, but a much bigger jump in rental prices as well. So I think on one hand they did have to grandfather it, but I think then coming back to intergenerational issues, I think a lot of younger people would perhaps be thinking that on one hand, we're seeing all these changes coming through, but then on the other hand, there are older Australians who are taking advantage of negative gearing, and it's not something that they'll be able to take advantage of.
So in effect, the drawbridge has been pulled up.
Yeah, absolutely.
In terms of that, though, if we did see investors sell, presumably they would be selling to either other investors or prospective owner-occupiers, and the government is claiming that there could be 75,000 extra homeowners and an increase in the home ownership rate due to these policies. Do you buy it?
Well, I mean, potentially, but I think there's a bit of a misconception around someone. You know, we have someone who's renting, they become a first home buyer, and suddenly you've solved the problem and everything's sorted out. The reality, though, is that we do have a flow of people coming through, and people rent because they leave home, they rent because they have a marriage breakdown, and also they rent because they're moving into a city. And labour mobility is so important for rental markets, and it's important to have really well-functioning rental markets for labour mobility. So all of these things start to become challenging longer term if we don't have enough rental properties available.
Now, in terms of creating more rental properties, again, the government's claiming this will tend to boost apartment supply. Do you see any other positives in this budget for the construction sector?
Well, there was a small win for small businesses and builders and tradies, and that is the free Australian standards. In the budget papers, it's around $1,600 a year saving for those businesses, but more importantly, it'll help to improve compliance as well.
Well, the housing industry crisis and the house price crisis in Australia has been nearly 3 decades in the making, so it's a bit much to expect it to be solved in one budget. Thank you both for joining us.